Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. On today's agenda, we'll be discussing Jamaica Money Market Brokers Limited and Jamaica Broilers Group Limited. And I'm proud to be joined by Justin Scott, Investment Banking Analyst. He's a frequent co-host here, so welcome, Justin.
Thanks again, Dan.
And folks, don't forget to subscribe if you like the content. Also hit the bell to stay up to date with the channel. We upload content just like this just about every week. Also, if you want to embark on your very first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Now let's get started with today's discussions. Up first, we're going to look at JMMB. Justin, what do you have for us?
Thanks, Dan. All right, good evening, ladies and gentlemen. So we're back here again today reviewing JMMB. For those who don't know, Jamaica Money Market Brokers Group is one of the larger banks in Jamaica, the great investment brokerage house. And they've recently been doing a whole lot of acquisitions further out within the Caribbean region, most recently acquiring Banco Bell out in Dominican Republic. And so let's see just how they have been performing over the last financial year. March 2023, they released their audited financial statements on Monday, July 10th, where they booked a 50% increase in gross revenues, moving up from 42 billion to 48 billion. Net interest income has reduced actually by 5% from 11.8 billion to 11.1. Fee and commission income increased by 19% from 2.5 billion to $3 billion. And I think that's really great for them because that fee and commission income is from I'd like to believe it's likely from the increase in loans that they have been issuing and the additional they would have been getting on it from the increase in the interest rates over the last couple of years. Gain on securities trading has decreased by 52%, moving down from 7.3 billion to $3.5 billion. That could be as a result of the reduction in market values that we've been seeing across the board. If you take a look at the market value and volume trading from the Jamaica Stock Exchange, you realize that it actually reduced by about 58% in terms of the value traded in 2023 compared to the prior year. This is a reduction in value, volume, and the amount of trades in general. So that would have reduced the amount of gain and securities trading that they would have been able to access. Total operating expenses has been increased by 8% from 18.5 billion to 19.9. Operating profit has been down 56% from 8 billion to 3.5 billion. A lot of that, as I said from earlier, would have been from reduction in the gain and securities trading that they're typically used to doing. As a matter of fact, I should note that this is the lowest gain on securities trading that JMMB has recorded since about 2015. Typically, I know them to do about $5 billion, but now it's all the way down. It was cut in half. So that's, I'm not so sure if this is a one-off thing. I know them to do about $5 billion. So let's see how they do the coming quarters in the coming year. But I do believe this might be just a one-off situation that's going to be rectified by the following financial year. And for the net profits, which has reduced by 46% from $11.5 billion to $6.2 billion, not shown on the slide here is actually the reduction in the share of associates, which would have been a big reduction from their associate stake of about 23.32%. in Sagicor Financial Corporation. That's not Sagicor that's listed on the stock exchange. It's Sagicor Financial, the parent company, right? So it actually reduced from $5 billion to $2.6 billion. If you go back to 2021, which is just about a year or two after they would have made the acquisition of Sagicor Financial, that's when they had recorded $1.8 billion in share of associate. So I believe last year was a bit of an anomaly, a bit of a one-off serious increase in terms of the amount of profits that we've been getting. So I believe that $2 billion mark right now is what we can expect going forward from this. The reduction in Sagicor might require a little bit more analysis there. I know that there could be, for example, the markdown could have been from the change in accounting methods from IFRS 17, where how companies, especially insurance companies, are recognizing their profits has been changed following the new accounting standard, moving from IFRS 4 to IFRS 17, because they're now recognizing profits not from the premiums, which is top line, to when the actual service has been provided out. So that's when they would be recognizing profits. So it's going to carve out a big chunk of a lot of the insurance companies or how they're recognizing their funds. So they're going to have to get a bit more robust going forward, right? It's especially interesting considering that a lot of the local financial companies have spec'd into insurance. Sagicor Financial acquired 60% of Advantage General in 2019. NCB acquired Guardian. JMMB acquired Sagicor Financial, which is very heavy in insurance. So it's going to be very interesting to see how these financial corporations are going to maneuver going forward with that. But without further ado, let's get into the balance sheet, where total assets increased by 8% from 613 billion to 665 billion. Total liabilities is up 10% as well, from 557 to 610. And the shareholders' equity is down 1% from 54 billion to 53 billion. Now, for those of you guys who actually do pay a lot of attention to the accounts, you may be seeing the shareholders' equity in March 2022 at 54 billion, and then you see the additional $6 billion in profits and expected to go up to 60 billion. However, that reduction in OCI that you'll be seeing when you really take a look through further in the audited will reflect that there is a big mark-off of about $7 billion, which kind of just eked it out just a little bit below that 54 billion in shareholders' equity, right? So let's touch into the key statistics. Current price is $29.32, not far above. I believe that's around where they did the APO back in 2019, right? PE ratio of 7.46 times, very attractive in normal conditions. Book value per share is about $25.19. So it's just a little bit above their actual intrinsic value as a company. Further from there, the trailing earning per share is $5.95, 52-week high of $45 and a 52-week low of $26. And when I get further into how the share prices have been performing, we can speak on that a little bit more. As a market cap of $75 billion, this is a very mature company, and they are very much aggressively pointed towards acquiring more companies and making use of the cash and leverage. So for the quarterly profit movements, as you can see here on the slide, JMMB has been gradually getting back up to its glory days. As a matter of fact, 2022 was its best year ever in terms of financial performance and net profits. So we moved far away from that 2020 performance, my apologies, where they're gradually increasing. Their recent acquisition of Banco Bell in Dominican Republic is going to be reflected on there, considering that they have acquired about 90% of the company. So additional share profits there, and we can expect when interest rates continue to even out. So right now, they've actually increased their repurchase agreements by about $17 billion, taking advantage of the global interest rate increases. Seven of that $17 billion is actually just in Jamaica. So you can see how well they're spec'd into right there. And as interest rates begin to level off going forward, we can see where the trends will go further from there, where they get back to proper returns to the gain on securities, or if they doesn't level off within the next 9 months, which I know that is very, very fond of saying, then we can expect them to continue to gain more and more on the lower balances and even out further from there. So JMMB is very well positioned either way the table turns. On the third slide, you can see the price history movement, and this is where the old saying that the company is not the stock really comes into play. So JMMB has been continuously performing over the couple of years. However, shareholders have not been seeing the love right there. Coming down from a high in April 6, 2022 of $53.10, and it's continuously just been drifting down further towards that mid-$20, $25 mark, as you can see with a lot of the other financial companies listed on the market. JMMB will have to get a bit more creative. They're going to have to be offering a lot bit more out to shareholders for them to really take advantage of it. I know they have a share buyback planned, and that's just awaiting approval on the Trinidadian side of things first, because as you may already be aware, JMMB is not just a Jamaican company. They do have their arms. They're cross-listed on the Trinidadian Stock Exchange. As they do it, they do have to abide by their rules and get both those things into tandem before they can actually go out and supply that share buyback. Well, before they can actually effect that share buyback on the market. So when that happens, we might be able to see a big a spike in the share price when that time comes, and a lot of people have been waiting for it eagerly. So once we hear news from that, we can maybe look forward to see a spike in the price from there. Dan, any thoughts on JMMB?
Yep, sure. It's hard not to like JMMB. I want to think of it as either the third or fourth largest bank bank operating in the financial sector space. It's great to see the good growth in the loan book by about 25% to $173 billion. My only concern is I'd love to have Keith on the program within the next 90 days is to talk a little bit more about the mark-to-market on whether it's GOJ securities or sovereign bonds that they're having that's caused about a $20 billion hit over the last 2 years to their OCI. So we see their investment revaluation reserve going from $4 million positive 2 years ago to now $16 million negative. It's unrealized losses, and it's clearly mark-to-market because of high interest rates, but I don't have a sense as to is it 20 billion of 200 billion of investments, 20 billion of 300 billion of investments. It's hard to tell because they do have, over $400 billion worth of investments. So I'd like to get a better feel for that. But regardless, I'm confident that as interest rates trend down, that we're going to see that reversing, that this PE of less than 8 times won't hold. Even with the fall off in earnings, we're seeing that the stock is trading at, under 8 times PE in a market where the main markets, should be more like 10 times. So it's trading down by about 25% relative to where I'd like to see it land. There's a little bit of noise about Sagicor Financial Corporation and their share of profits there, but I think I agree with you that going forward we should think $2 to $3 billion is more likely to be the normal level of earnings that they'll get from Sagicor Financial Corporation, and I'm still not clear on the impact of IRS 17, as you said. So one thing's clear, you can't analyze JMMB without having a proper understanding of how interest rates impact the business and how IFRS 17 impacts Sagicor Financial Corporation. That being said, it's still, a growing bank, a great brand, hard to bet against them. It's definitely a buy for me and one that you want to have in your portfolio for the long term for sure. Hopefully over the short to medium term, 6 to 9 months, we'll see the price correcting itself as interest rates are likely to be trending down over the next 6 to 9 months. And so all those things considered, it's definitely a buy for me. Okay, up next, we're going to look at Jamaica Broilers Group. On to JBG. Well, this one's definitely one of my favorites, top 5 for me. And by the time we've gone through the results, I think you'll appreciate why it's hard to bet against them. 23% growth in revenues up to $91 billion for the year ended April 2023. 29% growth in gross profit. Only 17% increase in distribution costs. Only a 10% growth in admin costs. When you put that together, that means a 77% growth in the operating profit up to $8.77 billion. So 23% growth in revenues translates into 77% growth in operating profits. They're doing some serious expansion, I believe, in North America. I had a quick chat with Ian Prasad before we did the program, and he confirmed they have about $8 billion of capex this year. You'll see $6 billion in their capital work in progress, and they're preparing to expand the business. In order to do that, they borrowed $10 million additional net debt during the year, and so that's what's driving the increase in finance costs by $800 million up to $1.8 billion. That being said, finally, the net profit before tax translates into 51% growth from $4.5 billion to $6.75 billion. And the net profit attributable to shareholders up by 42% from $3.1 billion to $4.45 billion. Earnings per share up 42% to $3.71. Jumping into the key statistics before I come back to the balance sheet. So at $35 where the stock closed yesterday, it's trading at 9.8 times. So again, a little below the 10 times PE. I do want to make note that in that $4.45 billion of trailing earnings, that they had a $1 billion loss associated with their discontinued operations in Haiti. So as we roll out over the next 4 quarters and naturally get away from that discontinued operations, there's at least $1 billion in improvement in profitability coming forward. And that would translate into a 25% improvement in the earnings per share. So in one sense, the stock's trading almost at 10 times. In another sense, if you take out those discontinued losses, it's trading by a 20 to 25% discount relative to where it needs to be. Jumping back to the balance sheet, we see 29% growth in assets, from $60 billion to $77 billion. And you can definitely see them making good use of that $10 billion of additional borrowings by investing about $8 billion into capital expansion, about $8 billion into their working capital, with expansion in both the biological assets that they're holding and inventory. So they're holding more birds, more eggs. They're preparing to expand, and that's a good story. When we looked at the 23% growth in revenues, I do want to note that 30% of the growth came from Jamaica and 10% of the growth came from North America. So when COVID slowed down and the impact was bigger in Jamaica, we saw U.S. Revenues making up about 42% of total revenues. Now that Jamaica's fully back, you see sort of a 10 percentage point swing, where Jamaica now has grown up to 64% of total revenues. So revenues in North America still expanding by 10%. It's just that Jamaica grew by much more. And again, based on my conversation with Ian and that $6 billion that we saw in work in progress, and I asked him what it was, and he confirmed that it's primarily the expansion that's happening with the plants and facilities in North America. It's clear that JBG is investing for future growth in the business. So I therefore expect over the next 6 to 9 months that we're going to see further growth in revenues, particularly in North America. Outlook for Jamaica is pretty positive as well too, with 6,000 hotel rooms under construction, and us seeing how when tourism fell off, how that impacted the revenues. So it stands to reason, as tourism grows in Jamaica, we'll also see broilers revenues growing. And word to the wise, the tourists consume more food than the Jamaicans do. So with 4 million tourists coming to Jamaica, especially with all of these all-inclusives, what they contribute towards the food bill is more substantial than the Jamaican population itself. So there is still great room for growth within Jamaica by virtue of tourism, and there's great room for growth in the North American market, where we see JBG investing heavily. So it's a good bet for me, because this company is really strong, very good brands, and we see how that brand has expanded into North America and how well they've been doing in general. Finishing up on the key statistics, market cap at $42 billion, pretty respectable. Stocks traded at a high of $40 and a low of $25.90. So again, at $35, I think it's 20 to 25% undervalued. And over the next 2, 3, 4 quarters, earnings are going to jump naturally by virtue of the loss from discontinued operations not being there, as well as the expansion works that are expected in both North America and the growth in Jamaica from tourism. Next slide shows quarterly profit, and you can see, as I said in previous discussions, and we talked about JBG, $1 billion per quarter is sort of the standard expectation in my view, and you can see on any 4-month quarter average over the last 7 quarters, they are averaging about $1 billion per quarter, and that's despite taking the $1 billion hit from discontinued operations from Haiti last year. Next slide shows stock price movement. So again, we mentioned earlier, it's traded at a high of $39.99 and a low of $25. We can see in recent months that it's traded up a little bit, and it's now into that sort of $35 range. But as the stock has traded up from, say, $30 to $35, which is a growth of about 15% in the last 6 months, we've seen profitability growing even faster. We mentioned 42% growth in profitability. So stock price not quite yet keeping up with the growth in profitability, and that means it's a good buy opportunity, because we see even further growth to come, as we mentioned, because of the discontinued operations issue, as well as the losses associated with that, I should say, as well as the growth and the capital investment we've seen. So definitely a buy for me, trading at well below 10 times PE, and with the outlook being very positive. Justin, what are your thoughts?
Thanks, Dan. Right, so Jamaica Broilers, I'd be fine calling it a direct tourism company, considering that Jamaica Broilers is very much ingrained local as it is right now. But as you rightfully said earlier, with the vast amount of tourists that come and pass through each year, and that number is only going to get higher as it's projected by the Ministry of Tourism. The increase in rooms, the developments towards the Montego Bay Airport, the reintroduction of Ian Fleming, and all the other investment properties that are going to be providing the space for them to stay when they come through here, right? There's a lot more room to grow locally in terms of providing for them. And with that being said, they have a very high cash conversion cycle. They have a great inventory turnover as far as the efficiency of the operation goes. As he said earlier, it's going to be speccing further and further into the North American market. So over there where they're an entrant, right? So they're great in terms of in this hemisphere in terms of their production, but in terms of provision of chicken as it is, then they want to have further and further to go through there as they continue to step forward. So Jamaica Broilers is looking good in that regard, so we can expect great things from them.
Yeah, and again, I want to say the growth potential in North America is huge. I mean, that market's 100 times bigger than Jamaica. Best Brand is improving their branding image there in North America. We know how powerful the diaspora is. When we had Chris here last year, he surprised us by confirming that they are the largest grower of hatchery eggs in North America. So they're not a small joke in North America. So I see them doing exceptionally well. I expect within the next 5 years that North America will be contributing 50% of the revenues. Right now they're down at 34%. So there's huge potential for growth, earning significant amounts of foreign exchange. So it's a great company to have in your medium to long-term space. It's the only company of its kind listed on the stock exchange, with their competitor being CB, and they're not listed and not likely to be listed anytime soon. So this is one you definitely want to have in your portfolio. No, thanks for that, Justin, and thanks for your contributions today. Those are greatly appreciated. Well, folks, that's it for today's discussions. I want to thank our viewers, as usual, for tuning in and for giving us your support. If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. So give us a follow and stay up to date on all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click that bell to receive all notifications. Remember, wise investors, slow and steady wins the race. Keep safe, everyone. Bye-bye.